Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Is that there we go. I had the volume on the microphone. Hey guys. How are you? It's Monday. Let's go to school today. But we've got an interesting week ahead of us. Let's go and look at what is going on here. So, E-mini, pretty good day on Friday, wouldn't you say? Look at that. But like, there was an okay move before the open, but then right after the open, like, zoop, and then zoop, they just kept going into the close. And in the overnight, for once, the overnight session is a little bit more positive here. So it looks like risk appetite is pretty good at the moment. However, this, last week was all about the gamma, right? This is gamma, and then it fell apart. But then they came out, and I think that the options guys were okay. These dealers are going to have a lot of stocks that they might have to dump. So I'm a little bit weary about being like, giddy up. Because, we've seen this happen before, all right? Remember that the last bad day that we had was right after the options expiration. So I'm keeping an eye out for that. Maybe we have a little bit of a dump, but then after that, I think we should be okay. Meanwhile, over here in the treasuries, yields are increasing on us a little bit. So the risk appetite overall just looks really, really positive right now, right? Oil is doing good. Gold is actually doing okay too. So it looks like the dollar is getting weaker. Silver's still kind of struggling compared to gold though. Copper, really big, crazy recovery there. That just looks amazing there. And we'll come over to the currencies here. You can see the dollar weakening quite a bit. We'll see where it goes today in the regular session, but we could have some stuff. We could have some interesting things. And then we got Bitcoin. So Bitcoin, I put a note out on Friday, if you subscribe to the Patreon, noting that there was some $1 billion prints in Bitcoin, that they were likely to try and make a move over the weekend, and it looks like that's exactly what they did, having finally recovered the 50K level. I'm really cautious about this just because it's tether printing, and especially if the Feds can taper. Like, the crypto should go down, but it won't. I don't want to be in crypto, but I got really bad FOMO. I don't know, man. Like the issue with this thing is that you can't really win. In the long run, I really don't think you can win with this thing. Is my camera okay? I think it needs to be down just a little. That's a little bit better. I changed the settings up again because when I move it over to there, it needs different settings, but those settings can work over here. They're just not quite as good as these ones. These ones a little less grainy, a little more vibrant. So you can't make up your mind on Bitcoin. Like here again, like the thing is, the what moves markets is new orders. Do you have a reason to believe that there will be new orders pushing up Bitcoin? Because if you don't, then you don't have a trade. So, for instance, us today, we have a reason to think that we will see new orders come into the S&P 500, but we think that they could be sell orders because dealers may be dumping stocks that they had to hedge gamma from last week, right? liquidity in Discord. Until I hear Powell go up and say we are beginning to talking about tapering, I won't believe it's happening. Okay, except for that every Fed speaker over the past week has come out and said that they're talking about tapering and that they want to do it in September. So yeah, you're a little behind the curve. Well, I have 2 bites of my bagel here. Let me do that and check Twitter, all right? Okay, well, the treasuries lost that real quickly, didn't they? I'm a little surprised. Futures Trader 71 talking about Cardano? Uh-huh. Okay, so they're gonna take a step or 2 back, apparently. How about Bitcoin? I just got here. I don't know if it was talked about yet. Well, so what I see going on right now in crypto is that the macro framework in Bitcoin could turn very decidedly against it here if the Federal Reserve is going to taper and there's going to be less liquidity out there and so on and so forth. Then that's not necessarily very good for Bitcoin, is it? But I'm not so sure that it really matters. So I was just tweeting here to Futures Trader 71 because he apparently has the Cardano. It really can't be predicted because it's in the hands of a handful of people that decide whether or not to buy or to print the tethers, essentially, right? So you can't predict it, really. You really just can't predict it. One thing I will say though, because he was in Cardano, and I sure see a lot of Cardano. I am not impressed with that project at all. Okay, they have, it's based on ADA, so like I question the technical expertise of the people that are building this if they're using Haskell. That is just no. I'm sorry, no. Haskell? I question their technical expertise. They chose Haskell. Okay, first of all. Second of all, they've been saber rattling and talking about doing crap forever. For such a long time. And like they're only just now getting like smart contracts up. So I do not see the case for Cardano, and I you know, it's the one getting pumped is really what it comes down to. And ultimately, I think that it'll probably end, you know, when things fall apart, Cardano is going to get hit the hardest. But who knows when that happens? This could go on for years for all we know. Well, maybe not years. It sure does seem like the regulators and everything are kind of closing in on the stable coins. We'll see. The creator of Haskell paraphrase, it warms your computer and outputs nothing. It's not why Cardano chose. Yeah, this is going to be a bullcrap art. Listen. Okay. Haskell isn't one of the best known programming languages. Well, it's not that it's not well known, it's that it's a shitty language. Folks. At 27th most, it is well known. It is extremely unpopular. The reason is that Haskell, particularly in conjunction with formal methods, is well suited to write code that is robust and correct. No. I can't. I'm reading this. Painful. It's painful to read this, guys. This allows programmers to have a larger degree of certainty that the code they have implemented is correct for the future that we envisage for Cardano, namely becoming the next global, social, and financial operating system, which can't happen. Assurance and reliability are essential. Like, here's the problem with Haskell, okay? It's a pain in the ass to use, all right? So Haskell is kind of like, okay, these guys, they went and they made C++, and then a bunch of other people kind of made their own programming languages that were roughly using the same object-oriented concepts and everything, but were a lot easier to use, like Java and C# and so on and so forth. And that is the world that we have today. And what Haskell came in and did was they said, oh, except for the really true, pure, correct way to do X thing would be to go and do it like this. So Haskell is almost like an academic language. I would think of it as an academic language. Like if I wanted to teach pure object-oriented programming principles, I would go and I would use Haskell. The problem is it's just not practical to use. It's just a pain in the butt to use, and nobody wants to use it because of that reason. So to come in and choose Haskell says to me that some business suit kind of guy, wasn't really a business suit, but somebody that wasn't really a programmer, came in and read and did a bunch of research, and they came to the conclusion that Haskell was the best suited based on what they read on the internet, with no actual real practical experience in the subject. And that's where they got the conclusion that they did. Serious. Haskell is like the last thing I would pick to do any kind of programming in. make a blockchain application that is programmed in Python. Okay, that would take off. It doesn't matter that it's clean or most correct or any of that nonsense. People use it, right? Yeah, I'm just not impressed with Cardano, and I believe again, remember, markets don't move on fundamentals. I mean, presumably they should, and most of the time they do. But if you think that fundamentals is what actually moves it, you're going to come to a lot of erroneous conclusions, and there's going to be a lot of things that happen in the markets that aren't going to make a whole lot of sense, right? What actually moves things is orders, right? So what's going on here are a bunch of people making decisions based off of that, Haskell is a great programming language and that Cardano is going to overtake Ethereum and all this stuff. No. I mean, maybe some people are, but probably what's more likely is that there's one person out there that is just putting pumping tons of money in it to push it up as high as possible, and in the hopes that other people will notice and pick up on it and try and buy it too. And that's a situation where you probably don't want to follow them, right? Because as soon as that guy liquidates, now the thing that was driving it up flips on its head and you get crushed. Anyways, it is kind of funny how many people I've seen out there talking about. I had a guy at work that I was talking about Cardano too. But I am still, I just don't care. I mean, I do care. I follow it so closely, to be honest with you. I follow the Bitcoin, like every little move in Bitcoin, way closer than I should. But until the stable coin problem is solved, I don't want to be anywhere near it. Except for with my garlic coin, we can pump garlic. How is garlic coin doing? Should we go and look at what garlic coin is doing here? Watch list. They were doing good on Friday. Ooh, it's okay. It's at 64 or 6.4 cents. They need to get that. They need to get to that 69 again. Why are we not just sitting at 69? This is a crime. 7 days. Yeah, there was pretty good rise on the 20th. See if they continue the bump this week. They let's see here. I think is it Tuesday? Oh, now I have to come and look. Reddit, garlic coin. Treasuries tick down there again. Less than 2 days. 25th. Okay, so yes. On Wednesday, garlic coin halves. So, yes, I'm looking forward to it. Could get interesting. Could get very interesting. Can you imagine if garlic coin were to have another 10x move? All of the sudden it goes from Dogecoin this to garlic coin that. Oh my, it could be exciting. Ooh, and they list garlic coin on Coinbase. That would be the dream, man. If garlic coin got listed on Coinbase, whew. Garlic coin's $100 all of a sudden. Could happen. My dream. That's my dream. Man, gold is taking another. There's a good little spike here since we started. Dollars get pretty pressured. The dollar is pretty pressured, but I would say that gold is moving way more than would be justified by just the dollar. Traders, will you please hit the like button if you haven't yet? This summer is slow, so we need the likes. Thanks, that is my dream. It's okay. Hey, we've been doing well on the TikTok, so you know, like in my view, the stream is for the dedicated few, right? And the general populace can watch the TikToks. I love you both, though. I love all of you. But TikTok I had one of the order flow TikToks get 10K views, and then every video after that has been getting 500 when normally we would get like 200, if that. So the audience is growing. I need to I don't know. I need to get some better videos. You know, the one that did really well, it was a story. When you tell a story, that helps a lot, I think. But I'm kind of out of stories. Good stories, at least. About order flow, at least. I don't know. But today, I think we need to talk about icebergs. Icebergs, yes. Oh my, is that Asher? Well, he's okay. I think he's just mad that everybody woke up and he was done in bed. I was reading that contests are big on YouTube. Have you considered running a monthly contest, maybe for bragging rights or maybe for the traders? What would the contest be, though? Just if you comment on a video, then yada, yada, yada. I don't know. So I do have a video out today, by the way. I haven't put a video out in like a month because I've been working on this one. But I did make a video for the top step, the earn to trade evaluation gauntlet video. It will be out when the market opens. So a lot of work. I think it's pretty funny. I think it's funny. It's not an amazing video, but it was a lot of work and it was pretty funny. I think it was a pretty good story, so hopefully that video does well. I suppose we could try doing a contest with that, and whoever comments, I'd have to do it like say it in the video or something like that, but Make sure you go and you leave a comment on that video, because that'll help that one out a lot. And that's one that could get a lot of attention, right? So, ooh, the iceberg at 0.5. Are the robots? No, you know what? Why haven't I been turning them on? I need to look at that after the, because J2, you know, I'm not as interested in him, but I don't want to get rid of the chart that he was using. I don't know. I gotta go fix it. I gotta go change my workspace up a little bit. I think I need to just be like, you know, Jay, you're just not doing what you were intended, and I need to move on. But I have an attachment to him. Like, I know that if it was, oh man, that baby is really unhappy. I'm sure that if he kept trading him, that he would probably do pretty okay. Well, I don't know, man. There is still this possibility that in 40 minutes or so, that the equity markets could sell quite a bit, but I'm just not seeing any signs of that right now. Risk appetite still looks pretty strong. News Squawk tweets central banker buying government debt and then giving them back the interest will not compromise our independence. Okay. He's just upset about something. He wants food or something. He's just throwing. He's learned how to cry, like, to get himself really worked up. So, like, I can't tell if he's, like, in pain or if he's just throwing a temper tantrum now. Well, when I watch the markets right now, I feel like this anticipation, but I think that's all in my head. Like, it's really not doing anything interesting. The gold is the only thing doing something interesting right now. Morning, people. Hey, Ayo. For a second, I thought you were making a comment about morning people, but now I realize that you were just saying good morning. Wait, I spoke your 3 favorite words? Gold? Gold and oh yeah. Dude, gold is having a pretty good run today. You gotta be careful about that one though, because every time it looks like gold is making a move and then like it gets chopped down again. You know? Like, I'm not into the conspiracy theories, but I would have to say that the conspiracy theories on gold certainly match the price action over there. It's like somebody intentionally is holding it back. It's every time that you get a move, it's like, okay, interest rates rising, that's bad for gold. Okay. But then when interest rates decline, gold still stays down. It's like, what? How they got creamed in gold and silver because of interest rates rising, and then when they drop back down again, gold doesn't recover. What? And then every time that they try and make a move, it like literally gets chopped down. It's like we have this huge move. Like right now, we have recovered the 1800 level, which is a pretty key level for them to recover since that huge sell way back, right? And you know, it could all be completely wiped back out. It'll just be like, we go up, and then all the way back, just like a perfect little pyramid. Yeah, gold and silver has been manipulated. Could be. I do. You know, another thing that I find really weird is have you heard about the silver bugs on Reddit? So apparently, you know, when the whole how do we say the whole GameStop thing was going on. Then some people came in and said, well, we should squeeze silver because there's a lot of people short in silver, which I think was probably true, but it's not necessarily a long-term deal unless, central banks continue to be easy because, miners can just produce more of it, right? So there's that problem. But it definitely got squeezed like one weekend of it, and silver just went up crazy. I mean, it was up so much. And then everybody came out and was like, no, we're not, this is just a distraction from GameStop. So people on Reddit came out and really chopped it down. They were really like, oh, this is a terrible trade. Now don't mess with this. Which I thought was really interesting. But I think that they had some good points. But then the thing that's really funny is that there was a large group of people stuck with it. And it is like a cult. Now, the things that they say are dumb. I see a lot of things that are just wrong about how markets behave. But let's hear what's you got here from the Wall Street. Or what we still don't know about the Fed's bond buying spree. What we don't know. The other says, few people share my first uncertainty because it seems so obvious that if the Fed buys fewer treasuries, the price will drop and hence yields rise. Its basic supply and demand goes to response. Yes. So let's go to this article here. This is really important for us in the treasuries. Okay. This is a story. Japan emerges as biggest driver behind recent plunge in yields on a zero hedge. As frequent readers will recall, one of the catalysts behind the forceful emergence of the reflation trade in the first quarter was a powerful move higher in yields, which many interpreted as markets pricing in higher long-term inflation. In reality, we have since learned that this move, which coincided perfectly with the end of Japan's fiscal year on March 31st, was largely, if not exclusively, a byproduct of Japan's giant pension fund, the GPIF, drastically shifting out of treasuries as it slashed its U.S. Treasury exposure by a record amount. Furthermore, as Morgan Stanley said earlier this month when news of GPIF's asset allocation first emerged, it is important to avoid the trap of forcefully goal-seeking narrative to lower yields, a trap investors dealt with merely 4 months ago. Then they quote, Treasury yields rose sharply in March, largely due to selling from Japanese investors based on the fiscal year-end considerations, yet most investors mistook the rise in yields as validation for a super-hot economy, and the consensus bought into the idea that the 10-year yields were headed above 2%. We cautioned investors that yields have overshot relative to the economic reality. Over the coming weeks, economic data in the U.S. couldn't keep up with unrealistic expectations, and 10-year yields started grinding lower. Correct. In other words, the GPIF's decision to dump U.S. Treasuries fooled the world into believing the recovery was accelerating, but now that yields are collapsing again, the asset gatherers and commission rakers conveniently brush it off as QE-driven distortion. Fast forward to today, when we may be experiencing a remarkable reversal of the events of the first quarter. As most know, in recent weeks, the market has been obsessed with the ongoing plunge in yields, with most interpreting this development as spelling the end of any reflationary hopes and signaling perhaps outright deflation. Yet, as Morgan Stanley again points out, it could very well be that the recent sharp move lower in yields is again merely the result of a country-specific asset reallocation. The country in question? Again, Japan. As Morgan Stanley's rates analyst Matthew Hornbach writes in his latest weekly Global Macro Strategist note, global macro markets continue to grapple with the fallout from rising COVID cases driven by the Delta variant a bit to different textures. With higher vaccination rates, booster vaccines, and stronger fiscal support, the developed economies have some scope for mitigating the economic damage from the rising cases, as Fed Chair Powell noted earlier this week. He doesn't see important effects for the U.S. economy just yet. Battle on August 18th, I would say it is not yet clear whether the Delta strain will have important effects on the economy. We'll have to see about that. But while Powell may not have changed his view for the economy based on rising COVID cases yet, markets are grappling with a risk case that the rise in the Delta variant will have a negative effect on the economy. Nowhere is this more obvious than the recent plunge in the 10-year nominal yields to 1.15% and the crash in real yields to all-time lows. Blah, blah, blah. This is a long story, I'm sorry, but it'll get to it. Of course, there's nothing revolutionary in arguing that the move lower in yields is a direct result of the economic slowdown. Fears rising from the widespread of the Delta variant, which has already prompted fresh lockdowns in Australia, Japan, and New Zealand. But how much is too much? According to Morgan Stanley, the decline in Treasury yields in the last 2 months, coincident with the rise of the Delta variant globally, already prices in that downside risk to a sizable degree. But far more actionable observation, courtesy of Morgan Stanley's Matthew Hornbach, is that the buying of treasuries is hardly a uniform event. In fact, as shown in the chart below, the decline in yields has been coming exclusively from overnight buyers, particularly from Asian buyers, i.e. Japan. The same Japan which was in quarter one busy dumping treasuries, while U.S. investors as well as European investors seem relatively bullish. As shown in the chart below, yields have declined in August only in the Tokyo session, while rising in London and New York sessions. Furthermore, as Hornbach notes, the lack of follow-through in Treasury yields after the sharp decline in the University of Michigan consumer sentiment, which curiously saw yields rise despite the most bearish economic signal in the survey's recent history, is encouraging in that regard. Correct. So what we'll see is we'll see the yields move up. Like right now, they're moving up a little bit. Okay. But this may just be like ranging action. But does it actually mean anything? Like it's not coinciding with so when an instrument moves all on its own, the frustrating thing about that is that you can't really judge as well why. You don't get as much information about why. Right? Paradoxically, this bizarre jump out of Japan may also explain the strange observation in equities. As we noted last week, in the past month, the S&P is down 4% in the overnight session and is up 3.5% from 9:30 a.m. to 4 p.m. This is a stark reversal of the familiar overnight futures ramp, which has led to most of the market's gains in the past decade. Yes, it very much is, isn't it? So, is the recent slide in yields the result of aggressive Japanese hedging and or outright buying of treasuries after GPIF's Q1 stunner? When yields blew out as the pension fund was dumping its treasury exposure, it is certainly conceivable that Japan's skittish bond managers have once again taken the entire bond market for the proverbial ride. Throw in the fact that Japan would be wrong-footing the entire market for the second time in 6 months, and the irony of all those rates experts being confounded by one nation's bond flow would be complete. NASDAQ trader, good morning. There's even more. Even if the move in rates is more than just Japan, the bond market has now taken its downbeat view of the Delta variant too far. Just yesterday, we reported that according to the CDC, the Delta wave has likely peaked across the Northeast. This confirms what Morgan Stanley said 10 days ago when it predicted that the Delta wave will peak in 1 to 2 weeks. It's now almost 2 weeks later. Where is my what money? What are you talking about? Also, 2 weeks ago, JP Morgan's Marko Kolovanovic has said the Delta cases are about to turn lower, an inflection point which prompted the quant to call for a bottom in yields and cyclicals. Picking up on this, Hornbach writes that the second derivative of daily cases in U.S. is peaking, which is in line with our biotechnology analysts' view that daily COVID cases in the U.S. could be peaking in late August/early September. As shown in the next chart, the rise and fall in treasury yields over the last few months has a degree of inverse relationship with the rate of change of daily COVID cases. In other words, if COVID cases indeed peak, we would expect treasury yields to rise. You looking for a short? Well, a little bit kind of in some interesting movement here in the ES. It's curious, by the way, Ace, how is things going? So, school all okay? I didn't see you as much last week. I don't know. That's curious. The treasuries did come up, so that's certainly bearish. But it's a little iffy, wouldn't you say? It's a little iffy. We are getting some delta short though, so maybe he's right with the short. It's a different morning with school now, I got you. My kids start today, so And finally, Hornbach, who was broken with Wall Street's dovish trend and expects 10-year yields to hit 1.8 by year end, notes that there may actually be long-term positive effects from the current wave of COVID cases in that it allows the U.S. population to move faster towards herd immunity. This is because more people have been vaccinated after the recent rise in cases, and given the fast spread of the Delta variant and the unvaccinated population, more people gain immunity by developing antibodies after infection. On that note, it is remarkable that the last serological testing in New York City shows that 75% of the population has some form of antibody immunity versus COVID. Immunity, whether due to vaccination or actually having defeated the virus, and thus the U.S. is getting even closer to herd immunity. Well, the thing that they don't mention in that story at all, though, is that the Federal Reserve has been saying across the board, almost every speaker in the past week has said something about tapering. And many of them have stated that they're concerned that the asset purchases are hurting more than helping right now. So they seem anxious to taper. So, yeah, this could just like the Treasury yields could just totally spike up here, you know? They're saying 1.8. Yeah, sure. Let's do 1.5 first, though. Imagine Jay Powell dies from corona. He wouldn't. If he caught it, I think he'd be just fine. He looks very healthy. He doesn't have any of the risk factors. So the thing you got to remember that even though it's possible for healthy people to die, there's very few and far between. The vast majority of the people that are dying, and I mean the vast majority of people that are dying, are like 70 years old and obese. So, yeah, this move up in treasuries, I would say, or I think we have to acknowledge that it is a pretty solid move up. I'm not really seeing the volume behind it, though. So on a chart, it looks like a big deal, but then I look at everything else and I'm like, oh, none of this stuff is moving. The only thing that's moving is the dollar. The interest rate can go to zero. But why would it? Like, again, like the thing is are yields cratering here because they think that the economy is going to fall apart? I just don't buy it. Look at the S&P 500, man, over the last week. You know, gold is up $22. Like, gold is just gangbusters for sure. Facebook report finds top link in 3-month time frame was about doctor who died after getting COVID-19. Oh, jeez. I don't want to repeat that one. Tough area here. Yeah. Well, the thing is that, again, on the open, it may make sense for market makers to dump their stocks. That's what happened last time that we came in after options expirations, right? But market's not behaving the same way that it did that time. The risk sentiment globally looks a lot more positive today, and yeah, the treasuries are pressuring the upside. We'll see if they push further. Have you bought them in the DAX and Stocks 50? I guess we're just going to have to wait 20 minutes and see what happens. Also, the E-mini at the moment just does not look like it wants to move. Bank of Israel leaves rates unchanged, highlights COVID uncertainty. Tweets Forex Live. It's hard to juggle a trade and make break. Yeah, I can't do that. I have to be into it. I guess the way the Ace trades is a little bit different, but it doesn't require as much. He's not looking at as many things. Well, it either goes my way or it doesn't. Yeah, but I'm kind of more like from the perspective of if I'm seeing something that is actually actionable, right? I'm trying to catch every little move and see what kind of informational content could be behind it, and it's a lot of focus. Whereas Ace is kind of more looking for a cross of a key spot. So, we could write. I don't know how his new one works, but we could write him a thing that would just make a sound and would indicate to him that there's a possible entry, and then he could decide whether or not he wanted to take it, right? So it's just not as demanding on your attention. The informational content? No, there's definitely informational content behind it. I mean, that's from a theoretical perspective. Like if somebody comes in and shorts the treasuries because they have inside information that the Federal Reserve is going to taper or whatever the deal is, right? That can happen. Now, when I come in, I look at it. Do I know that that's what's happening? No. But sometimes I do. So sometimes I can correlate that there's informational content. Right. It's cool to wake up in the morning and forget how many. No, that never happens. It's hard to describe how big of an impact having children has on your psyche. This, there's oftentimes this discussion of should you really have a politician that's never had kids in there, and these sorts of arguments, right? You've seen that. And I when I didn't have kids, I kind of thought, well, yeah, but that doesn't mean that they can't make correct decisions and things like that, which is true. But since having kids, I have to say, your whole mind and way of being is different when you have kids. It just affects it so much, and yeah, would absolutely affect the kinds of decisions that a politician would make. Whether that's good or bad, I mean, I would tend to think that it would be bad, but I don't have any evidence to suggest that. So, do you think that E-mini is going to fall? We'll see what it does, man. It is not the same as last options expiration. That's all I can say. The treasuries are up, but that move kind of happened on its own. There was a lot of pulling on it. So now gold is the one that's really moving. Oh, 6J did come here. Did move. 6J did move pretty good. We should keep an eye on that. That's probably why the treasuries came the way that they did, is because of the Japanese yen. But it looks like that the dominant force right now is the dollar is weak. That would tend to be supportive of equities, right? But the currency is the only thing moving right now. Gold started to move a little bit. Maybe. Sorry, did I say gold? I meant oil. Oil is kind of moving a little bit. Let's just see if it plays out or not. By the way, no spread trades today in the micro yields. They're only trading the 10-year. Having kids makes you worry about the debt. Having grandkids makes you add. Well, no, I don't. So, did you know that there is like math that proves that as long as the interest rate stays below the rate of GDP growth, that you'll never have to default on the debt. So, I would, as crazy as things have gotten, it's still not to the point, apparently, where you really have to be concerned about the debt. It could come though. Could come. I'm more concerned that like when you take on a lot of debt and you have all of these government policies, or the government is using so much of the GDP that it reduces GDP growth. What's the difference between TA-driven order flow and informational order flow? Well, all we're saying is orders move the market. So when we see the market move, is that informational? Which means, is there real information about the possible future trajectory of the economy or that individual instrument? Sometimes there could be, and sometimes there's not. And with us just looking at a move, there's no way for you to know. You cannot know just from looking at the move. The mistake that technical analysis traders make is they see it move. Like here with the yields, they've said the yields moved up. That must mean that the market doesn't believe that the Federal Reserve is going to taper. And what we need to understand is that they could be moving up because Japanese funds are buying bonds. And whether they want to buy bonds or not would have nothing to do with whether the Federal Reserve is going to taper. Right? But what we can do is, in certain instances, we can see an asset move, and we can see correlated assets move that are all in line with how we would expect those assets to move given a piece of information. And then we know that piece of information, like we saw it come out and we saw the markets move in correlation to it. Now all of a sudden we have some data, right? The market interpreted this economic number this way. And we can use that sort of, setup to make predictions about the order flow, right? So we can say, well, one of the order flows that could come in is automated selling from options market makers that hedge to delta and no longer need it. That could cause selling in the S&P 500, right? And then we can predict the flow. If I can't do that, then you're basically that. It seems to me that predicting orders, if you have something that is predictive of new orders, then you've got to trade, and if you don't, then you're gambling. Well, you can't know for sure, but there's models and so forth, and you can test them and see how effective they are at predicting future order flows. Where was it? What happens when GDP falls? Well, it's more like the GDP growth, right? Like, do we really want to live in this continued regime where GDP growth is really, really low, where we continue to be under that average 3% per year and this and that? Like, I don't think so. And when we add debt or when we add government services, it kind of makes that worse, because every dollar that you put into a social program is a dollar that doesn't get put into the markets to, generate growth. Why can't people just trade what they see and react to what the market does? Because by the time you see it, it's already happened. Just because the market moved, it doesn't mean that it's going to keep moving. Certainly not in futures. I mean, we could go and we could make a moving average strategy that says when we see this much of a move and then we get on it and we see how far it goes. And every time that I backtest something like that, it says that that doesn't work. What's CNBC saying? Digital currency company Circle says it's changing the makeup of its dollar-pegged stablecoin USD coin to just cash and U.S. Treasury bonds. The firm previously said USD coin was backed $1-to-$1 in a bank account, only to then reveal cash made up just over 60% of its reserves. Center, a consortium founded by Circle and crypto exchange Coinbase, unveiled the change on Sunday. Well, why wasn't it like that to begin with? But bravo. Okay, that's cool. Now, if only Tether could make that same change. And their treasuries, they want to come up, apparently. I don't know, though. Like, if the E-mini decides that they're just going to buy today, I feel people overcomplicate trading. I don't. Look, here's the thing, guys. You have any idea how many different, like, technical, mechanical strategies I've backtested? Like, hundreds and hundreds. And then, like, when you add in all of the different variations and permutations of them, thousands of strategies. Okay? Like, if there was this thing that you could do where if it crossed a certain number and I could just make all of my calculations based off of the price, okay, I would be able to prove it to you. Okay, I'd be able to go through the data, the historical data, and show you that it works. The fact that I can go through thousands of those and, a good one maybe has some periods of success, it should tell you something about the way that the market is. I don't understand why all of this market statistics say 95% of traders fail. Most of those traders are using technical analysis. You literally have the ability to look at all past action and see what would have worked. Why do people insist on believing something with zero evidence, especially when you have the ability to go and verify it? And I can only surmise that they don't want to verify it because they're afraid that it will come out and show them that it's not true. Explain that to me. Market's competitive. Market's competitive if there's a real statistical anomaly in price, it gets arbitraged out. Bitfinex is asking that most recent story. And they ask, so what happened in May 2021 that Circle had to move to a more diversified portfolio? What corporate bonds did they buy? Will they say, oh, was it MicroStar? Ooh. Gecko says, I think the complexity of a true backtest for most people is very overwhelming. That, you know what, that probably is, that's probably a major factor. I think you're right. Like, you know, I made a whole 4 video, like when I started going in and saying, okay, here's what you need to know about back testing, and I wrote it all out, you know, and I turned it into 4 20-minute videos that covered all of the pitfalls and things that you have to consider. You're right. It really is a lot that most people can't do. Still, I kind of feel like if you're going to put your own money at risk, wouldn't you want to do that kind of due diligence, you know? The treasuries are kind of shuffling here. Peloton dips as analyst says data on financing suggests a slowdown. Got 4 minutes left. Yes, I do, but a lot of people need a gut feeling about things and they become the 95%. Yeah. But that's the thing is, like, okay, if something like that just gets arbitraged out of the market, then trading does have to be complicated, doesn't it? Right? Like anything that's simple is going to disappear. Okay, so they kind of slipped through there. And there was a big stack at 05 half. So somebody's definitely trying to squeeze this. Trading is very complicated. But you and I are the minority here, I think, Gecko, yeah? The vast majority of traders want to say you got to keep it simple. Is the all-time high up at 44.54? Well, the overnight high for today is the all-time high, I believe. Oh, no, it is not. The all-time high is 44.76. Do you think they're going to go for it? I mean, at the moment, the E-mini feels bullish, but there's definitely something going on in the yen. There's something going on in the yen and the dollar that could be like completely uncorrelated. So we could see treasury yields drop and the E-mini take off. Won't understand why their system stops working and they blow up. That's what happens. That's what's happened to me many times. Yeah. These days, I'll still blow up. I'll still have a bad trade, but at least I have some inkling of why. I need to keep an eye on this yen here. Okay, the big old fatty order at 5 half disappeared. Okay, 1 minute. AO is really confident that it's going to fall. It doesn't say why, though. I would prefer a why. When you say that, when you just say, oh, I'm going to follow it, unfortunately, I can't just take AO's. I can't take anybody's word for it. But if you gave me a reason for why, I might be interested. It's a little bit of a buy there now. And the dollar is dropping further. Okay, the first move was definitely a buy. Look at that. Treasuries did downtick on that, but they're taking it in stride fairly well so far. USD JPY turns quickly lower as US dollar weakness spreads. Yeah. Definitely dollar weakness here today. Well, across the board now, gold, oil, S&P 500, all up across the board. Let's see here. It looks like the small caps, the RTY is leading the way, already up 1% versus 0.5% for ES. Soybeans are up as well, by the way. Soybeans are up, corn is up, everything is up, basically. The only thing I have on my list here that is down is the 30-year, apparently. Which also means that we're getting steepening here in the yield curve, right? Silver up at $0.50. Okay, so that move, if we were seeing the market makers dump their shares sort of a thing, I think that scenario is off the table. We're not seeing that at all. This is where it's like you can go and have a prediction about what's going to happen, but then the flow has to match it. If you don't actually see any indication that that flow is going through, then why bother, right? But that's where I think it's really important to be able to see the order flow and be able to see, like, is it moving because of market orders or because of polling, and what are the correlations together with it, so that you can sort out why a move happened and if it's really in line with your expectations or not. First and last time I trade ES2, boring. Let me tell you something. Trade because you make money from it. Don't trade because it's exciting. The more exciting it is, probably the worse you're gonna do. Okay, the 6J is coming back a little bit here. Oh no, tweet that crashed it. Taliban says it won't accept extension of evacuation mission in Afghanistan, tweets The Hill. Good grief. I don't know if I really want to get going on the Afghanistan thing. I'll say one thing about I was watching some stuff. They were talking about things happening to Christians in Afghanistan. They're saying that like the Taliban comes in and says if you have women or girls in your home, you need to put an X on your door. And then if they come around and if you refuse to put the X on the door or you lie, then they kill everybody in the household. And otherwise, they just steal your women and put them into the sex trade. Yeah. It is literal effing genocide in Afghanistan right now. Literal genocide. Sounds like a rough HOA. Why is Twitter giving me issues? That's curious. Well, let's work it out and see what's going on here. Yeah. Treasuries still look like a little under pressure, but that would still just be back to the open, right? It sounds like a rough HOA. Let's not joke about such things. It's just Biden's bread and butter business. I don't know, man. Especially when it comes to foreign policy and that sort of a thing. I really don't want to say things that don't have empirical evidence to back up, right? I really can't explain the Biden administration's behavior. I just can't. Like incompetence just doesn't seem to cover it, you know? I don't know what's going on there. Lots, the conspiracy theory is that they're just doing it all to help China, but I mean, can't prove that. Can't prove that, but I can't explain the Biden, especially the one that perplexes me the most is other countries are sending their special forces out into the city to get people to be able to evacuate them. And the US is saying that they can't do that. What's with that? That one's even worse because that's got to be a failure beyond just the Biden administration, yeah? Biden makes money through war? Maybe. Certainly what's going on in Afghanistan appears to help China. Certainly appears to help China, so there's the E-mini going for another little leg. Maybe I should have decided to just trade the E-mini today. But my thought was short. So if I think it's short because of options gamma roll off, what are we getting today? Right? I don't know where that flow is coming from. The only trade that I could make is going along with the momentum and which spot, like if I take it here at 64, will work out. It probably would, actually. Probably would. Like, they're going to buy. Could probably just buy the S&P 500 and make money. 74% of people believe withdrawal was botched in the CBS poll. Jeez. Dem sources told us that Joe Biden is expected to get involved today and call Democratic lawmakers. The rule vote is tonight. The rule may pass. The moderate group has not taken a stance against the rule. Really could let it go through. This is about the budget. Curious. Okay. Whew. They are just gangbusters out here, huh? Well, one thing that I'm going to want to be checking at the end of today is how broad this rally is, because a lot of the most recent, like especially on Friday, I went back and looked on Friday, my own portfolio did not do well, even though the market was up pretty good. And it just wasn't very broad-based. So we'll see if this move is any better. It could be. It could well be. I think that there's reasons for the global risk appetite to be good, right? Like Delta variants going away. The funny thing, though, is that the Delta variant really never stopped the E-mini, did it? From Yahoo Finance on the shorts on treasuries, it seems like we're getting some pretty hard bets right now in terms of these types of firms wanting to see the 10-year go higher and longer-term bond yields broadly go higher. Curious. Sure, Gecko. Getting back to the complexity of trading for a minute, I think we confer on the opinion that it is complex is because we are seasoned developers and we know that the devil is always in the detail. Yeah, well, so you've been writing stuff. So tell me about your systems, because what I have found is if I do a back test and it shows some profit, that those profits are almost always in line with you go long the S&P 500, then it works, right? And then when I get into order flow, my order flow signals seem to have much more effectiveness. But the problem with those is that they also are not as reliable. Like the back test doesn't match real life. So those ones are really hard to judge because of that. That's kind of been the experience that I've had. And to get something that is like in the NinjaTrader 8 back tester has a Sharpe ratio of 1 is really, really hard. And to get something with like a profit factor over 2 is really, really hard. It seems to me that like if you're doing automated trading, that it'd make a lot more sense to do something like manage a large portfolio of stocks and have the algo pick stocks, or a large portfolio of options. But right, the market has a tendency to go up over time, so the longer time frame back tests do better. Yes. Oh, yes. So, yeah. So much so. You finally got I'm glad that Ace turned around and went long. Because, I don't know. I mean, if it had been short, there's still just as much of a chance that a short could have really run too. So I should have taken it. I don't know. No, I don't think I should. I feel really torn between focusing on the yield curve and really putting my focus there versus taking advantage of this bubble up in the E-mini. But Yeah. I'll be pissed if it runs for 20 more points up. Well, that's the thing. It's like, how can you possibly know that it will or not? You know? Like you can have a trailing stop, but then you're always going to get less than what it actually does. Let's see here. Secondly, the data is available for retail traders for intramarket activity is lacking and does not allow for a proper backtest. What do you mean by intramarket activity? You're saying that, like, if I'm trying to do correlations between two markets, that doesn't work very well? Now that's curious. The treasuries skipped up a good 3 ticks there when the E-mini backed off. So I found that forward testing on order flow strategies is basically the only option. Yeah, it is. Well, like I still run the back test and verify that it like does stuff. But then yeah, I go and I do a forward testing. I just run it on a sim account for a month. Has anyone ever added to a winning trade? I've done that. I actually really like doing that. Although I found when I was doing that in the equity indexes that I would very frequently get myself in trouble from doing that too. Like I would take a trade and then it gets going, and so I take another contract, and that's like immediately where it stops, and then it goes back to my entry and I scratch. I would do that so often. The power of higher time frame. But my argument on the higher time frame thing, though, if our strategy is go long the S&P 500, why even bother trading it at that point? You know what I mean? Like that's the whole conundrum. Is like, in all honesty, you're going to make the most money by just putting your money in an S&P 500 index fund. Most likely, you're going to make more money doing that. Now, why would you not do that? Well, that's no fun, right? You want to trade, you want to get better at trading, right? So if you're going to trade, the longer that you have those trades on, I kind of feel like the less you're getting out of it, The longer that you have it in, the more it's like, well, you should just be in the index fund. If I wanted to invest my money long term, I used to believe in gold. Now I think you're right. I would rather an index. Why the SP over the NQ? So yeah, the S&P 500 is more reliable. Like when you look at the percentage gains over the last 30 years or whatever, it's like 10% for the S&P 500. Now the NASDAQ, when it's going up, it tends to go up more, but it also tends to go down more. And so the averaged out, profits that you get is not that special. But basically NASDAQ, you're taking on more risk and more volatility. So over certain periods, I mean, like over the past year, for instance, you probably would have made more money being in the NASDAQ, right? I never take a new position in oil if it's above 1%. Well, like if I was doing it here in the S&P 500, I would have been like long into the open, and then when it went up 2 points, so like let's say I'd be along at 55, and then when it got to 57, then I would probably add another contract. I think something like that can work, but what I prefer to do, because the issue with when you add a position like that is that it's moving your average position up. So if you want to ensure that the trade is still break even, you have less leeway. It's more likely to come back to your break even. What I would rather do is, add 2 or 3 contracts on at the beginning and then take 2 of them off on here and then let the last one ride. And that way, if they really want to take me out to break even, they have to come all the way back here, right? And then when I take those 2 contracts off, then I can come, if it starts ranging, I can start, trying to scalp with that one contract and take that range over and over again and try and build up even more profit. It's way more fun. NQ does not include financial stocks, so you're missing out on the added fluctuations of treasury pinned instruments. There you go. Would it pop? The E-minis certainly had a good open there, didn't they? For the moment, it looks like they may have reached the limits of their impact. I kind of see maybe a little bit of an area where they're getting stuck, but I haven't been watching them as closely as I've been watching the Treasury. And what about the Japanese yen? The Japanese yen still kind of looks like its move up is finished for now. Could come back in again if this is a meta order. We should keep an eye on that. And never take off a winning position unless it reaches my parameters. I mean, for me in the treasuries, I'm usually all in, all out. So, but the thing that I think is interesting about that is that all of this stuff about like campaigning is what we call it, where you use multiple contracts and try and take a little sequential profits in here so that you can hold your larger swing position for longer, or adding to a position, or whether it's all in or all out. Every empirical study that I've done on the subject says that you make the most money from all in and all out. All of these other methods of doing things are for you. These other methods of doing things are, help your psychology, essentially, right? Like if you know that you have a lot of profit baked in and that you can just let it ride and worst happens as you break even, then it's a lot easier to just keep it and let it run, right? Yep, all on, all out does, but scaling out is great. Yeah, so, scaling out is the easiest for your psychology, for sure. Yeah, Discovery Trading Group is right about intermarket crosses with Bitcoins. But there's big spreads, so there's kind of a lot of risk when you're holding the position. Investing in index funds versus futures long term, which is better? Probably investing in index funds. I mean, here's the thing, like hedge funds, like these guys that trade futures professionally, right? A really good one might make 20% per year, okay? Which is double the index fund. Right. But those are like the best. And a lot of people just end up underperforming the S&P 500. Actually, the majority of them still end up underperforming the S&P 500 because of the transaction costs. With the hedge funds, they're not interested so much in outperforming the S&P 500 as much as having non-correlated returns. So they want it to be, if the S&P 500 is going down, the hedge fund still makes money, and I think that's where we as day traders should probably be kind of looking to, is probably we're not going to outperform the S&P 500, but what does matter is that our returns are not correlated with the S&P 500. You want to be consistently making money regardless of whether the S&P 500 is going up or going down. In fact, preferably you make a lot when the S&P 500 is going down. Man, if you know that it's coming and you take that trade before, as she goes or before she goes, and those are the ones that you can just hold and let go forever, right? You try and taking the trade like you try and add to your shorts after that on the crazy days, you just get shaken out. Also, trading within a range, it's risky. Will oil do it if I have a good wiggle room? You're not wrong, I have found that I have more success with it lately because I have a better handle on why an instrument might become constrained like that. But it's still hard at the very least. Well, look, the Treasury is coming back. Aviv Milner being retweeted by Bitfinex tweets what started with a single epic short call turned an Australian derivatives trader on a quest to expose the largest crypto exchange in the industry. Now he wants the truth. Listen to Exposing Binance with Francis Kim by Aviv Milner. Okay. I mean, is it the same to invest in the S&P index fund versus S&P futures long term? Then now you're getting into something interesting in Nasdaq Trader because it's not. The S&P 500 futures contract, it has leverage to it. So if you have a large enough account, and I would have to say you'd have to probably start in the area of 10,000 or more, you might have the ability to buy a contract and just swing it and hold it for the whole duration of the contract until the rollover. And if you're catching it at the right time, and these days would be the right time, right? Because it just goes up all the time, right? Then hopefully you build up enough profit from doing that when the inevitable drawdown comes, your account can handle it. Because that's where the problem was going to be, is that the starting balance in your account isn't enough to handle the full drawdown when there is actually a pullback. Even in reinforcement learning, you have to really tweak a reward function because it wants to buy and hold most. Yeah. There's some really weird, interesting problems. You would need 20,000 on the mini for that. Yeah, you're probably right. When I say like you would need a minimum of 10,000, that you're taking a real risk with that, right? But it would allow you to hold overnight. It would allow you to hold overnight and not get automatically liquidated over an average overnight dip. But you're right. If you didn't catch a really big move, right? But the thing is that with the way that the E-mini moves and everything, a whole month you could make 10,000 off of that for sure. You need at least no. I think the intraday margin for it is like 5,000. You'd have to go and look. I mean, it changes from time to time. Plus, you need to be in profit, minimum 10 points for the E-mini. Yeah. Depends on the broker. No. The span margin is like 5,000. Let's go look. I could be wrong. Could be. In fact, I'm probably dead wrong. I don't actually know. I haven't looked at it lately. Let's go to Let's go to Ninja Trader brokerage. Brokerage. Where's the margins? Margins. Few margins by market. Intraday, initial, and maintenance. Okay, so the maintenance, it's 11,000. Okay, so you're right. We would need 20K. Okay, I got what you. I didn't even quite realize what you were saying. AMP has 1,000. Yeah, I thought on AMP it was a lot less, right? Yeah, futures. Let's just look here. Margins. The E-mini. ES. Oh, yeah, it's 11.5. I thought it was a lot less, but it might have increased since the pandemic. So, okay, so I guess you would need at least 20,000 to do it. But even then, with that being that high, I think that you would probably want more like 40,000, right? But here again, it's like, if you're going to have that much money, why put it into such a risky venture? Like, you don't need to put it into a risky venture. You can just put it into the index fund and make $4,000 a year. What's wrong with that? I really think one of the biggest problems that we have in the futures trading space is that everybody bases their trading based on the targets that are given to you in the combines, in the trader evaluations like Earn to Trade and Top Step Trader and Lilu and all of those. And I don't think that the beginner traders realize how truly aggressive those targets are. That you're probably not going to hit those targets every month. And if you just scaled back and just went really, really low risk trades, right? It's not as fun, but you're more likely to make some money at least. Wouldn't be very much. It probably wouldn't be much compared to the amount of effort that you put into it, but it's better than losing your account. Wow, you've been long oil since last night. That's great, dude. There was Discover Trading Group talking about arbing between different exchanges. Parabolic buy program in the NQ right now. Yeah, this looks a lot like last Monday, wouldn't you say? So you swing them and you add to them, which is curious. Like, kind of the issue there though is like, okay, what would happen though if oil dropped $1 all of a sudden? How often does that happen to you? Every time I've tried that sort of a thing, that's where the issue is. Now on the split side, there's this other side to it, which I don't really know anything about, and that is the CTA side, right? Because my understanding is that a lot of these CTA strategies are doing momentum, but they're doing, I think that they're doing momentum on a higher time frame. Like what AO is doing sounds very much like a CTA strategy. I've never tried trading futures holding overnight. In some cases, we might do that here in the treasuries. Like if I came out here and we had a really good profit baked in today, it might be worth holding. And you can certainly, if you use your leverage and continue to, push, you can certainly grow your account quickly doing that, right? There are some heavy risks to it. I think you really got to know the direction that it's going. I never checked today if there was any for starters, I never turned on Financial Juice, but we should come back and look at Forex Factory for the week. Oh, okay, the flash manufacturing PMI missed by a tiny bit. Existing home sales was slightly higher than expected. Yeah. Well, the one this is like a terrible example, AO. Okay. Like any kind of trade of that nature over the past year, I'm not very convincing to me, right? Because this is just a really unusual market regime that's not going to be around forever. I'm thinking back to when we had the Brexit woes, or when we had the trade war, right? Or even before all of that, when the volatility index was below 12 for most of the year, right? It is a different environment, and some of these things that people do don't work as well in that one. When the VIX was below 12, it was you could go into the E-mini and you could just keep adding and adding and adding, but to make any money, you had to be in for a really, really long time. And then the VIX spike came, and if you were still in on that, it was the whole thing would just evaporate overnight, right? And this is one of another really big issue that I continue to run into, you could say, is that it's really easy to find something that works right now, especially when the market conditions are easy. And so everybody talks about that, and they don't look at something that has, that's more consistent over a 10-year period or something. I would really like to say, can you find me a scalp that's effective over a 10-year period? Find me a scalp that was profitable every month for the last 10 years. Probably doesn't exist. Or at least nobody's found it if it exists. Not a scalp. Doesn't have to be the S&P 500. Just has to give you money every month. But there's this huge space of trading, and it's this infinite space, and everybody kind of looks over in this one little spot. YouTube Finance thinks that there's a scalp like that. Okay. For a retail trade. I was, another caveat that I should put on that. There are some scalps that robots can take that are like that, but not, buy the ES and sell it 30 days later. Yeah. That's not profitable every month for the last 10 years. Come on. Yeah, but if you were in that from Friday, yeah, sure. If you want to hold over the weekend, yeah. I don't know. If I'm gonna swing stocks, okay. So the other side of it is like for treasuries, I'm okay like swinging treasuries because there's not really a better way to do that. With traditional investments. So swinging treasuries, or especially like a yield curve trade, I think makes a lot of sense, right? But doing it with stocks, I'm not sure that makes much sense for me. I would rather put that money into an index fund. Successful 20% in risk to return of 1 to 4. I don't know if that's... I mean, that's in line. That's in line with what you should get. But that's a razor thin margin still, right? Like that. How long have you been doing it that way? Because I think that you're still kind of in the area where like it could change really quickly. It's just like, so I haven't shown you the video. Actually, can I edit this? Let me see here. Customization. Redirect. I'll add the redirect to it. How come it doesn't? That's really interesting. That when I want to redirect, it doesn't show me all of my videos. It only shows me one video, and it was when JB was hosting. That's really weird. But that's the industry that we're in. Well, okay, if you look at it that way, I guess that's okay. I just kind of put it into this whole thing that's like, I think part of the reason why we talk about it is that I suggest that technical analysis is not a very effective way to trade. Right. So like the thing that's interesting about everything that we're talking about is like all of the things that we're saying are like, hold it for a really long time. Right. So is the edge really in the entry signal that you got? Well, if you were doing 4 to 1 and you were getting 30%, then maybe it was. But with the way that you're doing it, the entry signal could be entirely random. The turtle traders were CTAs for sure. They were doing CTA momentum strategies. Anyways, let me go find this man. Am I like running out of memory or something? Because I'm having Windows crash on me in my yeah, and now I'm trying to open up a task manager was just hidden. No, I'm fine on that. I don't know why. It's just, I guess it's just the web browser is just a little screwy today. Okay, anyways, YouTube. So here's my latest video they put out today. So that one, like the robot, it like won every time, equal risk reward, won every freaking time for a good like 2 weeks. For a good 2 weeks, and then it kind of flipped on us. What if we work together and meet about? Well, we do that. There's actually a channel on Discord. If you get involved in it, like if you've been posting into that channel, and there's a automated trading, what is it called, algo development channel, and you talk in that algo development channel, or you've been messaging me, and then there's another channel where we've kind of been doing a little bit of that, but I don't know, it hasn't gone too far. A lot of the ones that I make, you kind of have to have my indicators to use, and so the less complication I introduce, well, the simpler it is to trade it, for sure. I'm just like, I want to be sure if I'm trading something, I want to be sure that I have edge. Like, that's really what it comes down to, is edge. That's kind of something that's difficult to quantify, but I want to trade it with edge. That's why I'm always saying, like, like, is there informational content behind it? Or like, do you actually have a reason to expect that future flow will do a certain thing? Because what price has done is not tell you that. Price is a very inaccurate measure of anything, because it doesn't factor in the liquidity. And so a lot of times people think, oh, it moved up, and then that means something, that it's like going to continue on, and it doesn't, Whereas there, you can predict order flow. You can predict order flow, and you can say, this is what my model of option schema says, and trade it that way. Like that's, I think, a way more effective way of trading. I think that's way more edge. Oh, wow. You worked at the NICE for 10 years. Now I'm working on a bot based off of the way things are done there. You want to do them in Python, though? Yeah. So here's the thing, is that I would like to make something that plugs into Rhythmic API, but Rhythmic API is a lot a month. So for me to really do that, I would need to have a stream of income that covers that. And the stream is kind of there, but it's not enough wiggle room, I don't think. So, not Python, do it in C# or something else. Well, I think that if I built my own platform, that I would make it in Rust, and then I would make it so that it can run Python scripts. But we're doing it in C#. I mean, I really like to do it on NinjaTrader. The issue with all of these, it's kind of a weird thing, right? With NinjaTrader, you've got this framework that works really, really well. Okay, and you have to understand what you're doing, but it's an extremely effective backtesting system, right? And if you want to trade futures on Python, for instance, like, you're redoing a lot of work. You're just doing a lot of work for something that you don't really need to. And it's not like there's something you can do in Python that you couldn't do in C#. They even have like most of the same libraries, actually, for the most part. But that goes into machine learning, and there's a whole bunch of issues with machine learning too. That's not necessarily, machine learning isn't necessarily gonna fix your problems. But if you needed to be fast, then you could do C++. But probably any of the edges that we would be looking to catch would have to not be based on time anyways. Being fast anyways. Surprisingly, where I learned to trade, none of them use algos. Okay. Does predicting order flow require you to do how many orders will hit at a given time at a bid-ask resting orders at a level? Well, I think that what you can kind of do is I think that you kind of want to have an idea of what the base of the market is. If you're doing it discretionary, you don't have to have it like quantified out. This is how many buys and sells I expect to see in this period, and then does it differ or anything like that. But that's the sort of thing that you want to be doing. And then what you should be saying is, based on the seasonality, this is how much volume I would expect to see. And then what am I seeing now? Well, sorry, let me back up. This is what I expect to see based on the seasonality. This is what I would expect to see based on the predictive edge that I have added on top of that. And then what am I seeing right now? Right. The best investors have never been coders or developers. So here's the thing: is like we're going back to like what game are you playing, right? If the game is intraday strategy, okay, so here are my parameters. You cannot hold overnight. Average winner has to be larger than average loser. There has to be a maximum stop, right? Those are like my parameters. And then it's just, and then the thing that we are optimizing for is consistency, not max profit. Consistency and maximum drawdown, you know. And you would run it on an individual instrument, or we'll run on an individual futures instrument. That's the other key, right? How many people out there in the professional world are actually doing it that way? Because the more that I get, the more that I look into it, the more I'm starting to realize that actually there's not very many, if any. Like most of these high frequency trading firms are trading large baskets of assets. These hedge funds and stuff are swing trades and hedges, and a lot of the banks and stuff like that, they're just making their money from executing other people's orders, right? It's the prop shops that should be taking the kind of trade that I'm describing, and it's like Axia, and that's it. You know, like there's really not that many people actually doing what we're talking about. Or even looking for the edges that we're talking about. Although certainly what does exist out there are robots out there backtesting it, surely. But why do retail traders get a real hard on for scalping? Well, so again, I'm only saying you don't have to hold overnight, because my contention is, if I'm going to hold overnight, I might as well put it in an index. Let me put it a different way. If I'm going to take a trade where I'm holding overnight, equities overnight, treasury is a different thing. But if I'm holding equities overnight, I need to be getting a Sharpe ratio over 1. It's not worth it to me unless I'm getting a Sharpe ratio over 1. Today's move looks very close to that. Yeah, it really does, doesn't it? Well, Richard says holding overnight is pointless for the game we're in. It comes down to your goals, right? I think in this instance, the goal is not to make the most money. The goal is to have a consistent stream of income. Right? Well, let's see here. Ace, you got out at like 65, didn't you? Yeah, it was around 65. You cannot control the risk if you say overnight? Yeah, so I'm not surprised. So do you see here on the chart, like this is going to be a large meta order, you could see the spot where you can even see that there was like a slip right there, right? Caused the little pocket. But obviously whatever it was driving them up, that was just kind of a hitch and they weren't done. And maybe they're still not done, I don't know. It's very interesting on the split side here to be looking at the treasuries and seeing that the treasuries continue to try and hold highs. Yeah, so AO saying, I don't know why people don't hold overnight if they have a cushion and why they don't add to a winning position, but they will double down on a losing position. Yeah. Well, I know, like when I worked for the bank, I wasn't allowed to trade and certainly not allowed to trade futures. So I would just watch a chart and I would put trades in a spreadsheet. And that's kind of what I was doing in the S&P 500 is I would see a critical juncture point and I would take a trade, and back then 4 points was a lot. And I would just try and, I would get that little bit of a buffer if I could get it to go 8 points, and then you just hold it. And then you could just hold it for days and days and days and days. And you'd get crazy winners from doing that. Yeah, works. Yeah, I only want to listen to the political stuff, says Ren. You know what? I kind of avoided that today, so. We do have like there's lots of things that we can do, and there's things that are like coming down in the pipeline through YouTube that I think will help us on those respects. But I wish I could pay an assistant or something, I think the ideal situation for me would be I find a video editor in Utah and they're willing to wake up early, and I could set up another computer for them and they could help moderate the chat and talk with me, and then also make notes about things, and they could like edit up a video later or something like that. But I don't think it's ever going to happen. My drawdown is less when I held my trades for longer time frames. I'll be your assistant. We're gonna I need somebody that comes over here. You live in Utah? Yeah, you just got hit. I really wonder if it was not the summer, because the other thing is this summer, so I'm kind of risk adverse because of the summer. But if it was not the summer, and I was not focused on the micro treasuries, would I have gone and gotten along in the E-mini here? So I would hope that I would have, but I just don't actually see a reason to actually do it. Like if I was taking a trade like that, I think that I would have to consider it a gamble here in California. So here's the thing. You were asking, like, what is the attraction to, like, scalping? I think the attraction to scalping is that these traders don't necessarily have a ton of capital, So like one of the big things is that AO's account has to be tens of thousands, if not hundreds of thousands, to be doing some of the things that he's describing. I could not go in long oil and hold it overnight and then add to positions the next day. I don't have enough risk capital. I mean, if I have that much money, it's probably going into other investments first. You know what I mean? Like I could probably scrounge that kind of money up, but then it would be hard and I wouldn't be willing to risk it like that. So I think that the reason that the scalps are attractive is because you can set a very small defined risk reward. So the question of can we find an edge in the short-term action? I and it's a harder problem anyways. Also, why do people like to call the tops on trades and look to go against the trend? Well, sometimes the trend changes. I don't know. I've never, well, on an intraday time frame, I've never been able to find something that was truly indicative of continued trend. Daily time frame, it seems like you can get away with it. By the way, gold did pull back a little bit, but they only just pulled back to 1800. So if they can hold that level and close above that today, I think that would be a really good win for gold. I think another one of the issues is that, like, go trade the treasuries. I mean, look at this thing. Okay. Yeah, we had a period where the yields rose quite a bit, but like from day to day, it's not so simple, is it? From day to day, it's not so simple. It's easy when it's the E-mini. It's easy when it's the E-mini and this thing just tends to go up, and you just get these little pullbacks that end up being nothing, And if you were gotten long here, say it gotten long, and I would be doing the reversal. I would be buying the dip. I'd be waiting for that day where it's really down big, and then knowing that it's going to do the reversal, and then trying to hold it for as long as you can. Here in this instance, it would have gotten a little nerve-wracking here, but probably could have held through that. But that's where it's like, hey, take 2 contracts, take one of them off, allow you to hold it, and then you could add a contract here when it did buy the dip again. Different game. So for me, certainly, we should just go back and we should say, I don't know if it really matters what the time frame is or anything like that, but just that it's effective in the treasury. Yeah? Maybe that should be our standard for right now, because that's where our focus is. And we could swing it. And I think it's okay to swing the treasuries because, that was a big buy. Interesting. It's okay to swing the treasuries because we've got, you can't just buy an index fund like that. Well, I mean, I think you can, but I don't know. I think it makes much more sense to try and scalp the futures and treasuries than it does in the equity index. So, like, why not go and try and take advantage of the inefficiencies in treasuries like a lot of banks and other funds do, and just do it yourself so you're not paying the fee, the transaction costs. That's kind of how I look at it. Man, they're going to go. Is the yen taking off again? It's ticking up a little bit. Disappointed in the treasuries today. Well, that might have just been like a reversion that happened. They didn't get a very good entry anyways. So I'm just gonna say Take that off. So I'm wondering if there's just more money coming in from Japan. Because it's definitely like the dollar moving down seems to be where we're getting, yeah. It's definitely dollar correlated. That's so interesting. Yeah, I'm long the silver, but I'm quite underwater in the silver. This is not very much though. It was like a few hundred. It was like, I think that the overall position was worth $500. I don't know. The move that we're getting in the treasuries today might not be a huge deal in the long run, but I would say that there was some fairly decent volume pushing up at points. You know, we had that big block buy, for instance, 5.5. And it's come up there multiple times. Like, it's really squeezing hard. Tax overnight is 30,000, really. They might turn around here. We'll see. Nah, I don't know. That's maybe doing like a, I bet you here in the 10-year. Pull it over here. That might be worth a try. What, the average time staying as short is counterproductive in ES? Oh, I don't know. One of our jobs is risk management. Yeah. I mean, one of the things is you can get long and you can make money from taking on risk, right? You can make money from taking on risk. One of the issues, though, that I have with the whole risk management side of it is that it's not technical. Am I moving the goalposts with that? I don't know. I'm just saying if profitable trading comes from using technical analysis, it seems like the risk management portion of it is actually what's making you money, and I don't think that you use technical analysis on that. I think that you're using what you know about the markets to judge when you need to manage your risk and so forth. You know? calculated risk, not stupid risk. But it's stupid risk is what's making money right now. Damn, I missed it. Sucks. Democrat Senator Manchin House should pass infrastructure before the budget. Okay, I wonder what that's all about. There's a lot of drama apparently over the budget and the infrastructure bill in the Senate today. Sucks, I missed it. Not quite. I brought, maybe if I had put that in a little bit earlier. It is what turns stupid risk into consistent profit. So there you go. Like there's a thing. Is like if I come in and I say I'm going to risk 100 ticks and I'm going to take profit at 100 ticks. Okay. And then find me something that more than 55% of the time wins under those risk parameters. Like it's really hard to do, right? But if you come in and you say, well, I'm going to scale out or add to them and whatnot, when you start doing things like that, you can actually like dramatically increase your win rate, right? And your overall profit. But what we need to realize is when we're doing that, where is the money coming from? Is the money coming from because we have something that accurately predicts what the market is going to do? No. We're making money from taking on risk. And the issue that we come into always when we're making money from taking on risk is that we are vulnerable to fat tails. We are vulnerable to fat tails. That's the issue. So then it comes down to your personal risk management. Do you recognize when we are in a fat tail and act appropriately? I wouldn't say that I always do. I would say I'm probably 50-50 on those. Any recommendations on volume indicators for NinjaTrader, like one that displays volume in parallel to the candlesticks? Well, so NinjaTrader just calls it vol, right? And you can run like a moving average on top of it and all that sort of thing. I'm not sure if that's what you're referring to. I really like this one from Lizard Indicator, which is AMA relative volume. Seems to do a really good job of showing you like what asset is moving the most at that time. Oh, he wants a volume profile? Well, there's the built-in one. But on Futures.io, there was Cam's volume profile, and I thought that was really good. I know there's a bunch of them out there, but you're going to have to dig for those ones because ever since Ninja Traders made it a feature, it's harder to find the free ones. Well, gold is bouncing back up. Yeah, 1805. I'm interested to see what happens with this commodity complex, though, because I don't think that what the Treasury is doing here today is very sustainable. It seems like there's just this group of people in the treasuries that just really want to believe that there's not going to be a taper. And they're going to be really surprised when either this week at Jackson Hole or at the next jobs report or at the next Federal Reserve meeting, you know, like that could collapse on them very, very hard. As long as gold holds above 1800. So here's what I'm worried about in gold. Okay, that's as far back as it'll let us see. Okay, so you got this thing going on here. It held 1800 for a long time, and there was a couple of those points where it seemed like it was looking kind of good. And then this day right here happened. Now this is just like maybe a buy the dip. Maybe this didn't matter. But what I'd be concerned about is they're going to come up maybe even to 1850. And then Gadish. You know what I mean? Like, that's just the way that gold's been. I think it would make a lot more sense that like this was build a base, stop everybody out. It's on its continued run. But like, here's the problem. Are the yields going to increase? Because if the yields are going to increase, then that could really hurt gold. That could really hurt gold. And there's a really strong possibility of the yield increasing. The things that are moving it right now still appear to me to be short-term pressures. And if the Federal Reserve tapers, that's going to come back. It's a possibility, yeah. Now on your golds, or sorry, not on your golds. Your oil? I think oil makes a lot more sense. Of course, it's struggled lately, but I think that the longer term fundamentals in oil are pretty good. And I think that this Delta variant is just a blip. And so I think that demand in oil can continue to recover. So I think that like some sort of a swing in oil, and especially where you would have caught it, is like really, really good looking. It's kind of funny though, like, because the trend has been down, so it's kind of interesting that you ticked along on that. You think about the nifty. That's the first time I've ever heard of that, to be honest. Where you could tie options on futures contracts for gold. Did I finally get filled? I don't know. That looks like one of them. You get filled and then you don't actually want it. You think it reaches 70 this week? It's possible. It's within the range of possible. When was it at 70 last? Oh yeah, that's definitely possible. One of the things is that I didn't see any kind of story or anything that would have led me to believe that oil was really going to move in particular. I do think that oil up over in the longer term makes sense, though. What should we have put for today's title? I don't know. There's nothing. You know what's so funny is like the S&P 500 goes up and it's like unremarkable. It's like, what do we say? S&P 500's up again. Oh, it's amazing. Like nobody cares. It's up every day. No, I'm not particularly happy with my spot in line there at 6.5 either. Nasdaq Trader says yes, but why? Yes, but why what? Why is it up? Because it's always up. They manipulate gold and silver. Well, so they say. Can't prove that. I can't prove that, so I shouldn't say that. Whether it's manipulated or not probably is besides the point. I mean, it moves the way that it moves, right? I wonder how much of this direction is options driven. I do too, because this move looks a lot like last Monday's move, and last Monday's move looked a lot like options, and I find it curious that they're not dumping today. The market doesn't seem too concerned about anything, though, do they? That makes me wonder about the taper. Is it the case that they really don't think the taper is going to happen? They think that the Fed is full of crap? Or, because if that's the case, then they could be in for a real shocker when the Fed says, yeah, we're going to do it. Or is it that they don't think that the taper matters because they're like, well, maybe it's hurting more than helping? Thank you for saving that link. Yeah, guys, go and watch the Earn to Trade review and leave comments. You can make fun of me or whatever. So I was pretty reckless with that challenge. So I thought it was a fun story. You can have fun with it. You don't have to be. I won't take it personally. Yeah. Anyways. Is it gonna fill? It's almost there. It's pulling, but there's nobody's hitting it. People really like hashtag fails. It's an interesting thing because in trading you can choose to do whatever you want, really. There's an infinite number of ways to trade it. Some of them are profitable and some of them are not. But like, you know, of course, part of it would be what are your goals? I think for me, my goal is to become the best trader and to become the best interest rates trader. So I think I should stick with what been doing over here, and maybe take one trade a day over here on these markets. Today was a bad trade. So how do you cure your anger, man? Go to therapy? I don't know. I think that when you have a trade that loses and you're like really getting like agitated about it, that's like kind of a sign that your decision making is impaired. He didn't fill me. They're not gonna fill that. Shouldn't have done it. Shouldn't have done it. How do you keep calm? Adderall. Largely Adderall. That end, I don't really have a whole lot of at risk here, right? If I was risking as much as AO does, I would be super agitated all the time, wouldn't I? I would be super agitated. I'd be agitated and like, why aren't the interest rates going up? Why are all these people buying bonds still? Where's all this money coming from? How come the correlations, everything is up? It does all that makes it can't last forever. But that would be silly to be like that, because it's like, yeah, I'm sure that's like what's been happening every day for the past year. So why would it stop? Why would it stop? At some point, it's going to stop. I really think the taper. I really think the taper is going to come. I'm almost positive. I would say that there's an 85% chance that there will be a taper, and the taper could cause some problems. Could you take the recap of the trades that you've taken today? Well, so the one trade that I took. Well, I guess there's this one. This one is just a scalp, and I can't really explain why. Is it basically some things I'm seeing in level 2s and correlations that made me think I could pull a tick out, but I should have scratched it. I should have taken that when it was up and they were only hitting like 4 contracts into it. But it's the same kind, it doesn't matter. This one, I took a trade and I was seeing that they were a little high and they were going to come back, and that the E-mini was not behaving right. Like the E-mini did not look like it was risk off. It looked like they were going to buy the E-mini. So I was buying the rates here, expecting that the flow would come in selling it as the economy continued to show strength. But what appeared to happen was that we had a move up in the yen and the treasuries followed it. And that's why that's why that didn't work. So I held it to my stop and took it off, managed to take it off. All of my trades are off of the DOMs. I have some charts, but not. So this chart right here is for the dollar, because this is just the best way for me to see what the dollar is doing. And I do have like some charts over here, but I don't hardly ever look at them. I just kind of glance over there and then I say, okay, so what's been moving right now are all the correlations. I have 3 charts for the E-mini, which is kind of silly. This one right here, by the way, look at that. That buying activity is like very unusual. How far above that orange line we are. Very unusual. But anyways, you can make some money holding for a long time. It's just how do you deal with the drawdown? You know, like how did you deal with the COVID when that happened? March 2020. All right, guys, time for me to go. I will see you tomorrow. Stay profitable.